owner equity is essentially your net worth. So let's say you invest $7,000 in cash and $800 of office equipment into your business. What does this transaction mean? What does this transaction look like? Basically, on the financial statement, which is a balance sheet, your assets will increase $7,800, or they will be, if you had nothing in your business at all, your asset sections will now say $7,800, which is the cash and office equipment. Cash, office, 7 plus 7,800. Then the other side of the equation, the accounting equation, which you don't have to do any of this. All you have to do is make sure somebody's doing your bookkeeping and recording your transactions. But nevertheless, it's good to know how these financial statements are impacted and created. Then your owner's equity also goes up $7,800. That is the right of owner or owners of the company. Liabilities are not impacted. Liabilities would be impacted if you used a credit card. We're not using a credit card. Last slide. Assets equal liabilities plus owner equity. That is the accounting equation. Again, don't get tripped up off the accounting equation. I'm not here to teach you how to be an accountant, but I am here to get you familiar with terminologies and frameworks of this accounting in a simplified way. So assets equal liabilities plus owner equity. When you look at your balance sheet, which you should have a balance sheet, I have to talk to that colleague and ask why people wouldn't have a balance sheet. Anyway, look at that balance sheet. You have assets. Any balance sheet should look like this: assets, and then total liabilities and equity. So assets, cash, land, supplies, office equipment, buildings, and other properties of value. That's $7,800 cash, and the office equipment went right here, right, in my assets. But there is an accounting equation, meaning there is a balance. This is the balance sheet. We're balancing things, and that's why there's two entries. The second part, or the other side of the entry, because if you put in something here, it has to come out here or be the same as. Now, there are shifts in assets that happen, shifts in liabilities, but we ain't gonna go that deep. That would just simply mean you took money from a current asset, or you made a current asset a fixed asset, and you just shifted here, and there's no change in liabilities and equity. So you take out $500 of current assets and you move to fixed assets, then that's just a shift in assets, no big deal. Anyway, double entry accounting, assets equal liabilities plus owner equity. Owner's equity, assets, and then total liabilities and equity. So equities belong to those who supply the assets, the owners of the company. And because you invested that, now your net worth is $7,800. Your equity, your skin in the game in your business is $7,800. Rambus.com. Make sure that you are subscribed to my channel, like my videos, leave comments, let me know what you want to learn. If you want to learn more about owner equity, transactions, I'm going to bring it anyway. So if, Rambus.com, where was I? CountYourOwnBag.com is my handle, all one word, Count Your Own Bag, on my YouTube. That's the name of my YouTube channel. Subscribe and like my page and like my videos and tell your friends, share them. Let's count this bag. See you on the other side.